And let's talk a little bit about GDP growth. LPL Research has increased the forecast from the 5 to 5.5% range up to 6.25 to 6.75%. What's behind that really pretty optimistic forecast?
Yeah, Janet, I mean, it's kind of some of the concepts we just talked about. I mean, the economy is opening up more than we expected, just 3 or 4 months ago. Now, here's the kicker. Let's say 6% GDP. I mean, that would be one of the best GDP prints we've ever seen since World War II. All right. But the key thing is, look at a place like Goldman. Goldman's got an 8% GDP. Some other places have even higher. We're not sure if we're going to quite get that high, but the truth is things are opening up. The GDP looks really good. Now, the interesting thing about GDP, it doesn't always correlate to stock returns. What I'm getting at, last year was the worst GDP we saw, down about 3.5% or so. The worst GDP we saw since the Great Depression, yet stocks gained 16%. And so we've seen some really big GDP prints, and stocks don't do quite as well. Again, a lot of it has to do with the concepts we talked about last year. The stock market's a forward-looking mechanism. The reason the stock market was so strong late last year, maybe even early this year, it was sniffing out that big economic recovery that we're going to see the second half of this year.